Hey everyone, welcome back. We're doing a deep dive today, and we're going to be talking about cryptocurrency.
Oh, okay.
Yeah, crypto. Specifically, we're looking at the market right
Mhm.
now and how different everyday investors
Mhm.
feel about it versus like the professional investors.
Yeah.
It's like they're looking at two different charts.
Interesting.
Yeah, and the main source for this deep dive is
Okay.
the Great Crypto Divide: Retail versus Professional Investors. And
Oh, okay.
it's wild. Memecoins crashing, Solana's doing well, and we even get a look into what Donald Trump's DeFi project is doing.
Okay. Wow. So a lot to cover them.
Yeah, definitely. So the source is saying that, like, retail investors, everyday people, they're not feeling good about crypto right now.
Yeah.
Like Bitwise CIO Matt Hugin, he said it's the worst sentiment he's seen in years.
Hmm.
But then on the other hand, you have the big institutional investors, and
Feeling good.
yeah, they're bullish.
That's so
I know,
strange.
it's weird, right? Why is there such a difference?
Well, I think one way to look at it is this thing called the Crypto Fear and Greed Index.
Oh yeah, I've heard of that.
Yeah. So it basically tracks like the overall feeling in the market, right?
Okay.
And recently it like totally plunged.
Really?
Yeah. Down to fear at a score of 44.
Wow.
And just last month, it was up in greed territory at like 69.
Oh, that's a big drop.
Yeah, and I think that drop is like directly tied to how everyday investors are feeling.
Like they're getting burned.
Yeah, exactly. Like think about all those meme coins that were so hot.
Yeah.
Now they're down like over 20% in a single week.
Oh, wow. Yeah, some people are calling it a meme coin massacre.
Oh yeah.
Yeah, like this crypto trader, D Farmer, he said it's one of the most brutal things he's seen.
Brutal is right. And I think like that whole meme coin situation, it's a big reason why there's this like growing gap between how everyday investors and the pros are feeling.
Okay, yeah, that makes sense.
Because like institutional investors, they've got these huge portfolios, right?
Yeah.
They're probably not messing around with meme coins as much.
They're probably more diversified. Yeah.
Exactly.
Yeah.
And they're just like way less exposed to those super risky assets.
Hmm. So it all comes down to risk,
Yeah, it's all about how much risk each group is willing to take.
which is interesting because when you look at the platforms each group likes, it's like totally opposite.
Oh, really? How
For
so?
retail investors, they seem to be really into Solana right now.
Solana.
Yeah, which is kind of surprising, right? Because it's connected to all those meme coins.
Oh, right. Yeah.
But the professionals, they're all about Ethereum.
Ethereum, huh? Even though regular people don't seem too confident in it.
Yeah, it's weird.
Yeah, it is kind of weird.
It's like they're seeing something that everyday investors aren't.
Yeah, it's like they're speaking different languages almost.
Right. Like this analyst, DeFi Dad, he called Solana's popularity with everyday investors surprising.
Surprising, huh?
Yeah, and he said that retail ETH sentiment is probably at its worst ever.
Wow, worst ever. That's pretty harsh.
Yeah, but at the same time, we're seeing all these reports about how experts are like scooping up Ethereum.
Scooping it up, huh? Maybe they're seeing the potential in DeFi, decentralized finance.
Oh, yeah, that's a good point.
Because DeFi, it's basically trying to rebuild traditional finance, like lending and borrowing and stuff,
Okay.
but it's doing it on the blockchain, so you don't need all those middlemen.
Oh, so like cutting out the banks and stuff.
Yeah, exactly.
That's pretty cool.
It is pretty revolutionary.
And speaking of DeFi, there's this really unexpected player getting involved. Donald Trump.
Donald Trump, wait, what?
Yeah, he's got this DeFi project called World Liberty Financial, and they're reportedly buying a ton of Ethereum.
No way, really?
Yeah, it's crazy, right?
Yeah.
And I bet that's something that professional investors are paying attention to.
Yeah, I bet they are.
So, like, the big question is who's going to be right in the end? Are everyday investors just panicking before a big crypto boom? Or are the pros, like, missing something?
Tough to say.
What do you think?
Honestly, it's impossible to predict the crypto market with certainty.
Yeah, that's true.
It's like trying to predict the weather.
Yeah, it's super unpredictable.
But, like, one thing that seems to separate the people who do well in crypto from those who don't
Yeah?
is their ability to, like, ride the waves without getting too caught up in the fear or the hype.
Okay.
They don't panic sell when things dip, and they don't FOMO into things just because everyone else is.
So they stay level-headed.
Yeah, exactly. And they focus on those long-term strategies regardless of what's happening in the short term.
Yeah, that makes a lot of sense.
Crypto is a marathon, not a sprint.
That's a good way to put it.
You gotta pace yourself.
This whole situation really makes you think, though.
About what?
Like, are there deeper reasons why everyday investors and institutional investors see things so differently?
Yeah, it's a good question.
Like, is it just about the market, or is there something more fundamental about how they approach information, how they handle risk?
That's a really interesting point, and it makes you wonder if there are, like, psychological factors at play,
Yeah.
different ways of thinking, different biases, maybe.
Yeah, it's definitely something to think about.
For sure.
Well, this deep dive has definitely left me pondering the deeper dynamics of the crypto world.
Me too.
It's a fascinating, complex landscape, and it seems like the divide between retail and professional investors is only getting wider.
Absolutely. And who knows what the future holds.
Only time will tell, but one thing's for sure,
Yeah.
it'll be an interesting ride. Thanks for joining us on this deep dive,
Yeah, thanks for having me.
and we'll see you next time.
See you later.
Bye.
Bye.